All right, so you're here for the lowdown on the latest earnings calls, and today I'm going to jump right into it with Citi Trends fourth quarter 2024.
Yeah, they had a seriously strong end to the year.
Strong how?
Well, for starters, their comparable store sales popped up like 6.4% in Q4, which put them right around $211 million in total sales for the quarter.
Okay, not bad. But revenue's only one piece of the puzzle, right?
What about their profitability?
Now that's where it gets really interesting. They actually managed to boost their gross margin by a full 60 basis points, landing at 39.7% for the quarter.
Okay, so they're not just selling more, they're keeping a bigger chunk of each sale. That's got to make investors happy.
Absolutely. And it looks like they're being super smart about managing inventory, too.
Yeah.
Their inventory levels were down 6% year over year.
So they're keeping things lean, avoiding that overstock situation. That's usually a good sign.
Exactly. And on top of that, their balance sheet is rock solid. They wrapped up the quarter with $61 million in cash and zero debt. Wow. All right, so starting the new year strong, and it sounds like that momentum is carrying over.
Yeah, seems like it. They said that their comparable store sales are already tracking in the mid-single digits halfway through the first quarter of fiscal year 2025.
All right, so continuing those positive trends they saw in Q4, what are they thinking for the rest of the year? What's the big picture outlook?
Well, for the full year, they're projecting comparable store sales growth in that low to mid-single digit range.
More solid growth.
Right. But what really caught my eye was their gross margin projection. They're saying they expect to expand that by at least 220 basis points compared to last year.
Oh, okay. That's a serious jump.
Right. Definitely a sign of confidence. Plus, they're anticipating full-year EBITDA to come in somewhere between $5 and $9 million.
All right, so we're seeing a picture of continued growth with a big emphasis on boosting profitability. Let's unpack what's actually driving these numbers. What did they point to as the key factors behind this performance?
So, a few things stand out.
Mm-hmm.
They talked about seeing strong customer traffic and transaction growth.
So basically just getting more people in the door and making sure they're buying something.
Exactly.
Yeah.
And on top of that, they're also seeing an increase in average basket size.
Mm-hmm.
So people are spending more per visit.
Okay, so good news on both fronts. Get more shoppers and then have those shoppers spend more. Makes sense.
Right. And this all suggests that their offerings are really resonating with customers. They mentioned that their good, better, best product strategy is working well.
So giving people different price point options makes sense.
Yeah, but the real star of the show seems to be their off-price strategy, especially the extreme value product test they've been running.
Extreme value meaning?
Like seriously deep discounts.
Yeah.
Think 50 to 70% off on well-known brands.
Wow, okay. That'll definitely get people's attention.
Yeah, those kinds of deals are hard to resist. And they're seeing the results across almost all their product categories. They talked about increases in non-apparel.
So things like?
Giftables, stocking stuffers, family basics, sleepwear, home goods, that kind of stuff, all performed really well.
And what about apparel?
They saw strong growth in children's and menswear, and footwear was a real winner with high single-digit growth.
Driven by those.
You got those deeply discounted branded buys.
It's all about the deals.
Yeah.
Okay, so sounds like a lot of strength across the board. Were there any areas where they stumbled?
Well, they did mention that plus-size apparel didn't quite meet their expectations.
Why is that?
They attributed it to some internal execution issues.
So more of a hiccup on their end than a demand problem.
Yeah, it sounds like they've already identified the issue and they're confident they'll have it sorted out by Q2 of the 2025 fiscal year.
Okay, good to hear they're on top of it. Now looking beyond just the quarter, what about their longer-term strategy? What are they doing to position themselves for success down the road?
So this is where it gets super interesting. They're taking a really targeted approach by focusing on the African-American customer base.
Interesting. How so?
Well, they mentioned that their customer research showed that this segment includes a significant number of average and even higher income folks.
So it's not just about demographics. It's also about recognizing the purchasing power within that segment.
Exactly. And it suggests they might be looking to evolve their merchandising and marketing strategies to really cater to those customers.
Makes sense. Okay. So where does that fit into their overall plan?
Well, they laid out what they call their three-phased business journey: repair, execute, and optimize.
I like that. 3 phases. So where are they now in that journey?
They believe they're transitioning from the repair phase into the execute phase this year.
Okay. So repair, meaning?
That was all about shoring up their fundamentals. So things like implementing their three-tiered product plan, developing their capabilities for sourcing those extreme value products, improving core retail processes like merchandise allocation and reporting systems, just getting the foundation right.
Getting all their ducks in a row and execute is about taking those improvements and putting them into action.
Exactly.
Yeah.
It's about doing all those things consistently and efficiently.
Making the machine run smoothly.
Yeah. So they're focusing on having the right core product selection, offering compelling value, speeding up their supply chain, reducing working capital, and making sure their inventory turns over quickly. All that operational stuff.
Okay. So if repair was about, the foundation execute is about building the house. So what are they focusing on in terms of specific product areas for this year?
Well, they highlighted a few key areas for what they call product intensification. They're looking at big men's wear.
Which makes sense, given.
Yeah, given the focus on that customer segment.
Right.
They're also addressing that weakness they saw in women's plus size.
Right.
They're expanding their family footwear offerings.
Okay.
And they're getting into more consumable goods.
Now that's interesting. Consumables meaning.
Think pantry staples, snacks, everyday essentials, that kind of stuff.
So they're aiming to become more of a one-stop shop.
It seems like they're specifically expanding their home and lifestyle categories with a big emphasis on those consumables.
And the key here is they're going to offer those recognizable brands.
Exactly. Leverage that off-price model to get people the brands they know and trust at a price they can't beat.
That's a pretty powerful combination.
Yeah.
Okay. So beyond consumables, what about their broader approach to branded merchandise? I heard they're making a big push there.
Yeah, that's a major part of their strategy. They want to more than double the amount of branded merchandise they offer this year with a long-term goal of having branded goods make up somewhere between 20 and 30% of their total merchandise mix.
Okay. So really leaning into those recognizable names.
Right. They seem to believe that brand recognition is a huge advantage in the off-price space.
Makes sense. Okay, so a lot of changes happening on the product side. What about on the technology side? Any interesting moves there to support all these initiatives?
Yeah, so get this. They're starting to implement an AI-based product allocation system.
Oh, wow. So using artificial intelligence to figure out what to stock where.
Exactly. The idea is that by using AI, they can better predict demand at each individual store. Right. So they can make sure they have the right products in the right quantities at each location.
Makes sense. Avoid those markdowns and boost sales.
Exactly. And they said that their early tests with this system have been really encouraging.
Nice. So smart use of tech to make their operations more efficient. What about their physical stores? Any big changes planned there?
Well, they're running a remodeling program with a goal of sprucing up at least 50 stores this year. They've already finished 18 of those.
So giving those locations a fresh new look?
Right. And in terms of overall store count, they're planning a relatively stable approach this year. They're looking to open up to 5 new stores and close up to 5 underperforming ones.
Okay, so kind of a balancing act between expansion and optimization.
Exactly. And they're projecting capital expenditures for the year to be somewhere between $18 and $22 million.
Okay, so probably covering those remodels and maybe some of those tech investments.
Yeah, sounds like it. Now, beyond all the strategic stuff, let's talk about their financial health. What's the state of their finances? Well, as we mentioned earlier, they're in a really strong position financially. They ended the quarter with a nice pile of cash and no debt, right? And they're projecting to generate positive free cash flow in the current fiscal year.
That's always a good sign.
Right. Shows they're moving toward a more sustainable financial model.
Absolutely. What about returning value to shareholders? Any plans there?
Yeah, they actually restarted their $50 million share repurchase program, and they've already bought back $10 million worth of shares.
Wow. Okay, so putting their money where their mouth is.
Yeah, but they did emphasize that their primary focus for using capital is going to be on those strategic investments to drive growth.
So both rewarding shareholders and investing in the future, a balanced approach. Okay, so we talked earlier about that big jump in gross margin. What's driving that?
Well, they said it's mainly due to those ongoing improvements in their merchandising strategies. So getting better deals on their products.
Okay, so squeezing more profit out of each item?
Yeah, plus that increasing mix of higher margin branded and extreme value products is helping too.
Right, so those big discounts are still profitable for them overall.
Exactly. Now, on the expense side, they're actually anticipating some improvement in their SG&A expenses.
So becoming more efficient despite all these new initiatives.
Exactly. They're projecting leverage in the range of 30 to 50 basis points, even with inflationary pressures and the need to reset some of their incentive compensation plans.
Interesting. So they're finding ways to keep those costs under control.
Definitely. And here's another interesting tidbit. They're actually expecting their effective tax rate for 2025 to be around 0%.
0%? How's that possible?
Yeah, it's due to some adjustments they made to the valuation allowance on their deferred tax assets.
Okay, so a bit of a one-time benefit, but still a big impact on the bottom line.
Right. It'll definitely help boost earnings this year. Okay, now zooming out, what was the overall feeling you got from management during this call?
Yeah, were they just reading a script, or did you get a sense of real excitement about the future?
Oh yeah, you could definitely sense the excitement. They were super pumped about the momentum they're seeing and the changes they've been making.
So real confidence that this isn't just a blip, but a genuine turnaround.
Yeah, they kept emphasizing the word fundamental, like they're seeing a fundamental shift in their business.
Makes sense.
Oh.
Okay. So they're excited about the present and confident about the future. What specifically are they most excited about?
Well, they highlighted a few things. They're happy about the positive results they're already seeing this year.
Okay, that makes sense.
They reiterated their long-term goal of getting their EBITDA back up to that $40 to $50 million range.
Okay, so ambitious, but achievable if they keep executing.
Right. And they made it really clear that they believe their strategies are the right ones to generate strong free cash flow and deliver excellent returns for shareholders.
Okay, so the trifecta. Strong performance, clear vision, and shareholder value creation. Sounds like a winning combination.
Definitely. And they also touched on some potential challenges.
Yeah.
Macroeconomic headwinds like tariffs and that kind of stuff.
Right.
But they're confident that their off-price model gives them some protection there.
So they're not immune, but they're well positioned to weather the storm.
Exactly.
Okay.
Okay, so taking all of this into account, what are the key takeaways here for investors? What should they be watching closely?
Yeah, what are the big things that jumped out at you from this call?
Well, for me, it's got to be that combo of strong comparable store sales growth and that impressive gross margin expansion.
Right. Those two factors together really suggest that Citi Trends is on the right track.
Exactly. And their focus on the African American consumer, paired with that shift towards recognizable brands at value prices.
Right. That seems to be a winning formula.
It does.
Right.
It'll be crucial for them to keep improving their inventory management and actually deliver on that positive free cash flow projection.
Definitely. And let's not forget that ambitious long-term EBITDA target. That points to some serious upside potential if they can execute their plan.
Exactly. And the fact that they're buying back shares while also investing in growth shows that they're committed to both rewarding shareholders and building for the future.
A balanced approach. Okay. It's a lot to like here. All right. Now for the fun part. It's time for our outrageous but plausible trade ideas segment.
Oh yeah, let's get creative.
Remember, this is all purely hypothetical and definitely not financial advice.
Agreed. Purely for entertainment purposes.
All right, so based on everything we've discussed, what's a trade idea that's out there but still grounded in some logic?
Okay, so given Citi Trends' big push into branded consumables, think those name brand snacks at crazy discounts, how about this take a long position in a regional grocery wholesaler that already has a strong distribution network for those kinds of products, but maybe hasn't really tapped into the deep discount retail market?
Interesting. So if Citi Trends' gamble on consumables pays off, they're going to need a reliable partner to move all those high-volume, low-margin goods.
Exactly. And this regional wholesaler could be perfectly positioned to step in and become a crucial supplier.
Okay, so the outrageous part is betting on a relatively unknown distributor based on the success of one retailer's new initiative.
Right. But the plausible part is that Citi Trends is clearly serious about this consumables push, and they're going to need someone to help them make it happen.
I like it.
Yeah.
Okay, my turn. So with Citi Trends going all in on extreme value pricing for apparel and footwear from big brands,
Right.
and remember, they're nimble enough to snag those opportunistic deals. What about this? Consider a long position in a smaller publicly traded company that specializes in providing short-term working capital and supply chain financing specifically to apparel and footwear manufacturers.
Okay, I'm listening.
So if Citi Trends scales up their branded merchandise strategy as planned, they're going to need to secure large volumes of inventory quickly. And those manufacturers might need some flexible financing solutions to fulfill those big orders.
Interesting. So this niche financing company could see a surge in demand if Citi Trends becomes a major customer.
Exactly. Of course, the risk is that it all hinges on Citi Trends' execution. And the apparel and footwear manufacturing sector can be pretty volatile.
Yeah, true. But hey, that's what makes it outrageous but plausible.
Right. Exactly. Okay, so we've got two solid outside-the-box trade ideas inspired by Citi Trends' strategic moves.
Definitely food for thought.
All right, so that wraps up our deep dive into the Citi Trends fourth quarter earnings call. We covered their financial performance, their key strategic initiatives, and even threw in some fun trade ideas. What's the one thing that really stuck with you from this whole discussion?
For me, it's their laser focus on the African American consumer, combined with that major shift toward recognizable brands at value prices. If they can consistently deliver on that strategy, they've got a real shot at tapping into a huge market opportunity.
Agreed. And what's one question that's still lingering in your mind?
I'm curious to see how quickly they can scale up that consumables business. Can they really make it work while staying true to their off-price model?
Yeah, that's going to be interesting to watch. Definitely one to keep an eye on.
All right, folks, remember, this was just our take on the Citi Trends earnings call, and those trade ideas were purely for fun and definitely not financial advice.
Always do your own research before making any investment decisions.
Absolutely. Join us next time on Talk Tickers when we'll break down another crucial earnings report. Thanks for tuning in.
See you, Sam.